All right, so after we went through the beginner content, pretty much for the general understanding of how to really perform in your trading career and how it's going to play out in your future. And right now, we're going to talk about the most important indicators, and that's going to be in your trading career. And a lot of people be using a lot of indicators like RSI, moving averages, and also VWAP. For all that indicators, I do not use them at all, and I only use volume when it comes to indicators. So right here, I'm going to give you some of the useful tip of why you should pay attention to the volume. So first of all, I think volume in my trading career has played out a very important role, and it has the power to predict momentum shift, predict when the stock is likely to top, and also most importantly, you will know the volume ratios to have the volume to compete with the previous day. That's going to be very helpful. And for that, there's going to be multiple different variations for volume as well. So understanding the volume variable, I would say volume variations will boost your winning percentage, I would say massively. So I think back in the days when I was trading in 2016 to 2018, I was learning about volume, but hasn't put the volume into my indicator yet. My winning percentage was around, I would say 65% to 75%. After I used the volume indicator, my winning percentage jumped to 85% to 95%. So it's a really useful indicator, especially after you have the fundamental patterns down. And once you understand the indicators of volume, then your winning percentage will go up significantly. So one thing that volume, it's not a single indicator that you shouldn't be using just one line or one number. It comes with multiple different variations. So it happens on different patterns as well. So different pattern do have its own, I would say, unique way to use the volume prediction. So learning about different variations when it comes to different patterns is also very crucial. So number four, a volume can help you to define when the momentum is likely to shift and when the pattern is likely to top. And also it's going to be very useful when you try to top tick or bottom tick a ticker. I think top and bottom tick, it's not that important, but when it comes to traders, whenever you cut the top or you cut the very bottom, I think it feels much better than getting the entire trend, but the profit's not that much. But getting the top and bottom, it makes me at least very happy. All right, so right here we're going to talk about the volume analysis. This is going to be the part one. Volume analysis. This is the general volume prediction for all patterns. We haven't gone into a specific pattern yet, but here is the basic formula. So let's call it this formula S1 now, since we're going to use it later. So first of all, it will be the pre-market volume times 10 to estimate the entire day volume. It has to be around 9:29:59 seconds. You get the entire pre-market volume, use that volume times 10. Now there is one scenario that whenever a ticker trades volume in the after hour, and a lot of people are going to ask me, hey, Steven, how is volume predictions going to play out if it trades on previous days after hour? Then we traded a little bit volume in the pre-market. So do I use the after hour volume and plus the pre-market volume times 10? The answer is no. You only want to use the pre-market volume to estimate the entire day volume. Do not count the after hours volume. So that is very important to remember. You do run into this type of scenarios, especially on gap up short, which we're gonna talk about later. So once you get the volume after market open, there's also another formula is going to be useful to get a more accurate pre-market volume prediction. It's going to be the first hour volume plus the pre-market volume times 4. This is the second formula, so we're going to call it S2. So the reason why I have S1 and S2 is normally S1 is to estimate the entire day volume without any resistance. You don't know if there's resistance or not. So when you have S2, that means in the first hour, if the resistance is really active and you push the stock down, now in that specific scenario, you want to use the S2 equation to calculate the entire day volume, since the pre-market volume prediction is not going to be very accurate, as I talked about, that you don't know if there's resistance or not. So and then on the second one, once the resistance has played out, you will know if the momentum is going downwards and it's going to lose liquidity throughout the entire day. Then S2 is going to be more accurate formula for compared to S1. And if there's no resistance for whatsoever for the chart, then S1 and S2, you can use both of the formula to get much better accuracy on the volumes going to trade throughout the entire day. And also you can use the entire day volume divided by the float to calculate for rotations as well, and which we're going to talk about in the later slides. So this is going to be the very, I would say, basic volume analysis formula you have to remember. It's very, very helpful, and it can be used in all types of patterns, including the pattern you shouldn't be trading. Like the $1 billion cap, the market cap exceeds over 500 million and flow exceeds over 100 million. Volume analysis, it's going to be, I would say, useful for all different markets. All right, so let's talk about volume analysis 2. This is going to be the part 2. And volume analysis that you have, first of all, you have the S1 formula, you have the S2 formula. Then we're going to talk about the momentums. So when the stock is going up, which means it's upticking, especially when the stock is going parabolic, that means when the stock goes parabolic, that also is going to attract more buyers, and which means you're going to get a little bit more volume compared to the normal estimation. So in this case, I would use a formula which will be the pre-market volume times 15. If the stock tends to have it's upticking in the pre-market, going parabolic in pre-market, and also going parabolic after market open, and using the formula pre-market volume times 15, it's going to be more accurate compared to the S1 equation. Now, same thing goes to the downside, that when the stock is down ticking and let's say you ran into a resistance, hits a massive wall into a resistance consolidation, that means the stock is likely to lose its momentum and stock is going down. Then when the buyers or the traders are seeing, okay, well, the stock is going down and there's not going to be opportunity for you to dip buy, then in that case, the formula changes to pre-market volume times 5. So it's going to be very important that you want to look at the long-term chart, especially whenever you are trading any type of pattern. And if you see a large wall of individual resistance, then you want to change the formula to pre-market volume times 5 after morning rejection. Same thing goes to the stock is going parabolic. If there's no resistance and the stock is trading massive amount of volume in the pre-market, and also it's likely to go parabolic and use the pre-market volume times 15. This is for more of a detail of how to really change your volume estimate. So upticking and downticking is going to be very important whenever you want to look at the entire, I would say, the overall trend, and also make sure to check if the chart does have any resistance or not. Now, one of the other thing is when the stock is going down ticking, that means volume estimate is going down. When the stock has low liquidity or is losing liquidity compared to the average volume estimate. So let's say the ticker traded 10 million volume in the pre-market. So the entire day volume estimate is going to be 100 million. But when the stock is down ticking or hit a massive wall of resistance, then you're only looking at 50 million. So when the volume is losing its liquidity, it's great for shorting because not many buyers are bidding the stock of going up, and also when the stock is going downtrending after hitting a resistance, it's not going to track more liquidities, and the less volume you trade, the better it will be for you, especially when you are shorting into a resistance. So for the last point, we'll also be covered into the later slides. As I talked about, for this entire course, everything is connected. So once you finish the first time, make sure to go over the second time as well, since some of the points is going to be explained in the later slides. So you want to combine the earlier slides and the later slides together.